The CPI inflation gauge shot up 0.4% in February. That report shows the prices Americans pay for shelter and gasoline drove up the consumer price index last month. Let's bring in Tim Biggam, a pro trader with Buy Alerts. Tim, what does the inflation number mean to the market and the Fed?
Yeah, I think, CPI, PPI isn't what the Fed focuses on too much unless it's an absolute, blowout number one way or the other. The PCE is their favorite indicator, which has been running a little bit hot here. We've seen rate, cut expectations come down a little bit for the upcoming months here. We still see the 10-year yield well above that 4% level. So I think that's the key for the market, because we're seeing stocks kind of stall out here at all-time highs, certainly on the S&Ps and the NASDAQ. The Russell has played catch-up. So if interest rates head back below 4%, I think that will be bullish for stocks. If they break back towards those old highs around a 4.5% yield, I think that will be a definite headwind for stocks, especially given where valuations on some of these big mega cap names are.
What's your trade of the day?
Yeah, looking at a kind of forgotten stock, Robinhood, HOOD, which has seen massive short-term unusual call buying activity over the past several days in the March 2nd expiration. So implied volatility has jumped from under 70 to over 80. It's right at a breakout point around that 17 level. So perhaps a big player playing for further upside here. I'm following along with it, but in a guarded fashion, buying the stock, selling these very expensive calls. The March 22nd, $19 strike, looking to capture that big overpayment and lean slightly bullishly with that big call buyer out there.
Some traders bullish on Robinhood. Thank you, Tim.
You got it.
Go to businessfirstam.com for where to see our show on TV.